I'm Jay Taylor. I'm the editor of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks, and I'm here with Chris Taylor. He is the president, CEO, and a director of Great Bear Resources, one of the most successful junior exploration companies that I've been following over the last number of years. Um, the company was a huge success. We picked it up in the newsletter at a little under $1, well, about $1.60, I think, in U.S. money at the time. Um, and then it ran up. That was in 2017. And then it ran up to I think it ran up to $19 in Canadian money in 2020. So quite a nice run. It's trailed off a little bit along with the regular market. The gold exploration sector has been a little cool. It's cooled off with that. Also, the company's been involved in doing some infill, a lot of infill drilling, not some, a lot of infill drilling, getting ready for its maiden resource. And I sort of think that the market's going to be somewhat surprised when that number comes out, scheduled for the first quarter of 2022, I believe. But it's quite a story that I want my readers and people that follow the work that I do to be aware of Great Bear, because yes, there are some others that we're following that are quite exciting, but this is one you should not forget because it's going to be a very successful story from these levels. I think investors that get in now should expect to do quite well, I'm convinced, even if we don't have a rip-roaring bull market in gold, which I think is coming as well, but that's another story. Chris, thanks for joining me today.
It's really good to see you again, Jay. How have you been doing with everything going on in the world?
Well, the COVID and all that's a challenge. You know, life isn't as enjoyable. You can't get on an airplane and go when you want, all that. But no, we're very well. We're healthy. Thanks for asking. And you and yours are well as well, I guess, right?
We're doing okay. I think we've had some interesting discussions around politics and viruses, those kind of things recently. But
Yeah.
other than that, we're doing okay.
Yeah, I'm doing much better when I don't think about politics, I think, Chris. But anyway, let's get on to the
Don't watch the news. Don't watch the news and you'll be just fine.
I think that's right. Just stay right with what your job is and keep focused on that. That's probably the best advice. Chris, we haven't heard a lot from you in a while. I guess, you know, COVID, you've had some fires that shut you down a little while for a couple of weeks, I guess, in Ontario there at close around your Red Lake property, the Dixie. But now on August 25th, you have come out with a sort of an update and a review of where you're at and where you're going. Just give us an overview of the main points of your August 25th news release, if you would.
Well, now we've got enough holes out. It's 400 drill holes that we've completed in this target. Sounds like a lot. Sounds like maybe we're just drilling for the sake of drilling. We're drilling the minimum number of holes possible to cover this really big LP fault gold discovery that we made 2 years ago, right? So we've been head down and drills up, just spinning away. There's 6 rigs going full time on that thing. And we're drilling off a grid over about a 4-kilometer strike length of that target. And the news that we came out with on the 25th was basically showing that there's enough information now to see that it's a continuous zone across these kilometers. I mean, we've seen that coming for a long time, but you know, it's hard to argue with 400 drill holes. And that means it's of similar scale to the biggest kind of bulk tonnage mines in the country.
Right. And your LP fault, your initial discovery, of course, was more a traditional Red Lake narrow, high-grade, extremely high-grade vein system. Then you found this LP fault, which allows you to go to a bulk mineable scenario, as you're talking about. And yet these structures are quite wide, I believe. So in my mind, the mining cost should be, and it comes to surface. So in my mind, there should be relatively low mining costs with wide widths. And I know you have these high-grade spikes in the midst of lower-grade intervals. So give us some idea about how you might proceed. How do you see a mining scenario here with this? You've got the Dixie and the Hinge off to the west, very close to the west of where your LP is. What are your thoughts? I know you're not there yet. You've got to put your resource out. You're doing a lot of other work. But what are your thoughts about how this might proceed, a mining scenario there, potentially?
Well, you're right, Jay. I mean, I've worked in an open pit mine previously. It was a copper gold mine here in British Columbia in Canada. And I think the best way to describe what we have, you're right, it's going to be low cost from surface mining of high grade material surrounded by all that lower grade material. Probably the best way to think about it is if you made a sandwich of, let's just say a plain peanut butter sandwich. I like those. And you tip the sandwich up on its side. You know, the middle of the sandwich is the peanut butter, and beside that, you've got the bread. So the middle of our deposit would be the high grade gold, and around that is the lower grade material. You know, and when I say low grade, it's not half a gram typically or something like that. Usually we're dealing with like gram plus material and quite a bit of it. And it's the spectrum. Basically, the gold starts very high grade in the middle and sort of fades just infinitely into the distance. I would describe it as we're over hundreds and hundreds of meters. So I think what you're going to be looking at is a bulk tonnage mining scenario, a low cost bulk tonnage mine that's probably, my guess is somewhere in the 3 kilometer long range. So similar to Canadian Malarctic, which is a big deposit here in Canada. And then down below that, you'll mine that peanut butter, you know, down to whatever depth that goes to. And in our area of Ontario, those mines, the adjacent mines, they go down for like 2.5 kilometers. Nice. So I don't know how deep they go. We've drilled to about 800 meters and it's still going. So we expect that to be the long-term prospect. So it's probably a dual case scenario, probably that bulk tonnage mining initially, maybe the first 10 plus years, and then down below that, however long it goes for underground. Of course, these are all forward-looking statements, and we have to put out all the studies to establish this, right? But that's looking at the raw data. We hear that in the analyst community, and it seems to be a reasonable assumption.
And then the high-grade peanut butter down below, where you can no longer take the rock from the sides out economically. But then what I'm wondering, and I know this is way into the future perhaps, but also, I mean, I got excited initially with your initial discoveries there. I mean, that lifted the stock up from 40 cents or so to, I don't know, a couple of bucks or so in no time. Those are not to be dismissed either. Those are potentially very rich. I mean, they're narrow veins. Might you see a scenario where you take those high grades and blend it with some of the material from LP? That's a possibility.
Precisely, you know, and they're only a few hundred meters apart, those zones. Right. So I think a reasonable scenario would be like if it was Great Bear building the project, and hopefully we get that opportunity, although with something this size, you never know. What you'd probably do is pay yourself back based on the high grade. You know, the middle of the LP fault zone is very high grade. Like we've had intervals like the best I've seen, is about 20 meters of an ounce from surface, right? So, that's the LP fault, the bulk target. So if you begin the process in those areas and then expand to the target as a whole, you may be able to pay back a project very, very quickly, you know, in that area, and then move over to the zones that you're talking about, the limb zone and the hinge, and blend that material. I think that's a reasonable assumption. So.
Chris, I've seen your cross sections that you provide. I think it's something like 4.2 kilometers. Is that the area that will be included in the initial resource, or is it somewhat smaller than that? Because I see towards the southeast end of that LP, there's some areas that seem to be empty that haven't been filled.
Yeah.
Are you still drilling there yet?
Yeah, we are, and that material will continue to do that. But what we're focused on is really the strike extent of about 4 kilometers and the vertical extent of about 450 meters of the LP. That's what should be in that initial resource.
Right. Okay, so, gee, I can't wait to get it. Q1 of 2022. I'll have to wait, be patient, I guess. But you've also, in your news release, talked about the step outs, a couple of them at either end of the LP where you've been working so far. Some pretty good numbers. And I know that this structure extends much more than 4 or 5 kilometers. So there's that lateral extension, that lateral potential. But then you said you're down to 400 meters. I think you said you drilled down to 600 or 800 meters of depth, and you're still in the same material.
Same stuff in all the zones. We've done that in the LP zone in a number of places. We've done it in the hinge zone and the Dixie limb zone, the adjacent zones, the high-grade veins you're talking about. And it's actually the best results we have in the hinge zone and the Dixie limb are the deepest holes. So it actually shows, which is typical in this area, the vein systems often increase in sort of richness as they go down. So we've seen the same pattern in the drilling that we've done as well.
Wow. Yeah, I know that. I guess it was Goldcorp at Red Lake that you know, they were down quite deep before they really found the rich stuff. So you're finding a lot of high grade stuff near at surface even. It's incredible.
Yeah.
It just seems to me the economics of this thing, and I have to think that given the scope, the potential for a tier one asset, which I think is something a lot of people, most people that are following this story are talking about,
Mhm.
something in excess of 5 million ounces. I've heard some people guesstimate up to potentially 10 million ounces. We don't know yet. I guess we'll start to get some idea with the initial resource.
Yeah, it
But
puts us in a really weird category because I'm not aware of any company that's come out with more than a 5 million ounce maiden resource. I've never seen that in my career.
no, I
So,
don't think I can remember anything like that. You know,
yeah,
if you're
so
lucky, they go for 1 million ounces if you can come up with that on your maiden resource.
yeah. So anyway, sorry to interrupt, Jay, but yeah,
Yeah,
it is
no,
a weird situation, right?
yeah.
Yeah.
So I'm just wondering. I mean, you've got this potential to be much bigger, but I guess really, when you look at net present value, you really want to focus on that initial 5 million ounces or whatever. I would think, though, that you must have, given the nature, given the size, the scope of this thing, that you must have some attention from some of the household name mining companies. I know you probably can't comment about that, but I would think they would be quite interested because those guys are having a tough time replacing their resources, their reserves. I don't know if you can comment on that, or you must have had some people looking over your shoulder, I'm sure.
I think that's a fair assumption, and I probably can't say too much more than that.
Right.
But
Okay.
we have not evaded notice in the industry in
Yeah.
any way. So how about I just leave it at that? Yeah.
Yeah. Wonderful. Well, then I guess we just really have to wait. Financing and how much more drilling do you have to do in this current program? You're almost
Well,
there, I think. You said 400 holes.
yeah, we think we have enough basically for the the maiden mineral resource estimate now in the near surface part of it, or more or less enough. Every time
Yeah.
I've gone through this process, the resource modelers, engineers, they always tell me I need another few holes here and another few
Yeah.
holes there. But that's drilling. We finished that drilling in July. And we're messaging that you're going to see the resource by the first quarter of next year. We're giving ourselves plenty of time,
Mhm.
basically, and I think we're well on track to be able to deliver that. And then the anticipation on size, market cap, it's a little bit funny. Like the analysts that are analyzing Great Bear, because they're anticipating that kind of tier one kind of
Yeah.
greater than 5 million ounces, and they don't know what the total ounces on the project is. I've heard all kinds of numbers, and we can think those things too. It just takes years and years to
Yeah.
be able to define all the gold. Obviously, it's really the first 10 years of mining that you pay for. That's where the value comes in. And right now, if you think about our market cap relative to peers,
Yeah.
the market cap suggests, based on our peer group, that we have about 3 million ounces of gold in the ground. Because in Canadian dollar terms, we're sitting with about a $750 million market cap, and groups that have 3 or 4 million ounces in the ground tend to be about $800 to $900 million. So we're cheap relative to that. So if we deliver what
Yeah.
the market is expecting, which is that sort of tier one level resource, it should add quite a bit of value to the company, and that's something we look forward to doing. But we're only a few months away now instead of years away, and I will say, even if we hit that deadline by the first quarter next year, it'll be the fastest delivery that I'm aware of a resource of that scale. So we hit the timing and we hit the size, it'll be the fastest and probably the cheapest that's been done in our industry.
So what's the next step then, Chris? Assuming that you come up with that 5 million ounce, whatever it is, resource Q1, where do you go from there? Do you start to look at economics? And how's your treasury in terms of what you might need to do in 2022?
Yeah, sorry, I think I kind of avoided your question a bit, not intentionally. I just got distracted by myself. We spent so far this year, we messaged we were going to spend $45 million, and we've spent between $25 and $30 million. So there's quite a bit of spending left to do. We have just over $80 million in the bank. So we actually have enough money to do the maiden resource, keep drilling at the same time, and generate a PEA with the money that we have. And of course, that PEA, the preliminary economic assessment, that really gives you an idea how profitable an operation would be, and you wrap that around once you've got the maiden resources disclosed. So those are things that I would look forward to next year: resource disclosure and PEA. And I don't think it would be a big time gulf between those two things.
And of course, going into a PEA will be things like metallurgical studies, environmental issues, the capital costs involved with putting this thing into production. Native issues, anything there? Are you okay with the native people?
The First Nations groups have actually been fantastic to deal with. I was just there last week, and I met the council of one of our First Nations neighbors, and I met the chief and council with the other. And these guys have been like, the best thing about working in a Canadian known mining jurisdiction is the law is settled and the process of consultation is understood, and the kind of benefits agreements that you have with local communities when you go into mining, there's lots of precedents. So I've been in jurisdictions before where you're trying to do this all for the first time, and it's very difficult. And in this area, a lot of people work in mining, they work in forestry, they understand the industry inside and out, and they've been a real pleasure to work with. We're doing the sort of environmental baseline work that everybody wants to see is being done right now, and that's what, one of the things we always talk about with mining is that, the benefits of mining flow to people all over the world, but it's the locals that get left holding the bag if there's environmental problems. We're Canadian companies now, especially in areas like these established camps, we're good at that environmental tracking, and it's not the 1950s, 60s, 70s, 80s, or even 90s anymore. And there's good cooperative agreements that go in place, and it gets all mined responsibly. I think my feeling as just a political point of view is that we should do more of this in North America. It would support jobs, it would support infrastructure growth and communities here. And there's a tendency to offshore the production. I think it's a shame when we have resources here and we have the ability to do it in our own territory and do it properly.
Absolutely, and have all stakeholders benefit from it, not just leave them holding the bag, as you say. So you can feel good about mining when it's handled that way. That's for sure.
Exactly.
Nothing to be. You guys are providing the things that the world needs to live comfortably and prolong life and so forth. So if you handle it the right way in a morally responsible way, I think it's a fantastic industry, frankly. So, Chris, anything else?
No, it is nice to talk to you again, Jay. Hopefully at some point the travel restrictions are lessened, and we can actually meet up in person again. I miss seeing you here in town, basically.
Yeah, I miss those trips to Vancouver, and I know the Metals Investor Forum was going to meet in September in person, but they've called that off now with the new COVID issues. But in any event, one day I'm confident we'll meet up again in Vancouver. Chris, thank you so much for your time, and we want to keep up with Great Bear story because it's a great one. It's a great story. Thank you so much.
Thanks, Jay.